we have Yassin El-Mandra, and he is one of ARK Invest's top crypto analysts. Check it out.
Sure. So, I mean, in general, it's helpful to provide some context as to how we approach these markets. You know, if you've been following ARK for a while, you know that we're very long-term focused and we have 5-year time horizons, but that we do thrive on short-term volatility, and we try to be that liquidity provider. So I think that, you know, taking that into context, and when you look at Bitcoin's performance over the last year, it's still up, you know, tenfold since March of 2020. And when you look at some of the kind of recent news around just institutional adoption, and then obviously some of the skepticism following that institutional adoption, some of the volatility that we're seeing, I think, is just a natural byproduct of all eyes on this market, and that some of the more recent entrants might have weaker hands. From a fundamentals basis, you know, I think we've never been, you know, more have had higher conviction than to date. When you kind of look at general holding behavior, when you look at some of the interesting projects that are being built, there was a recent kind of Bitcoin Miami conference where very few people actually spoke about the price. It was all just, here's what we're building and here's what we plan to deploy in the next 12 months. And so when we're looking at this from a fundamentals basis, you know, we've never had higher conviction than we have today. With regard to whether this changes our timeline, again, if you think about this 5 years out or in 5-year time horizons, I think these healthy corrections are a natural part of this asset class specifically. When you look at the opportunity, I think being between $5 to $10 trillion over the next 5 years, the recent price performance that we've seen is not against those longer term prospects. So we remain high conviction in Bitcoin, in the crypto markets. And we also think that this is just a natural, healthy correction and consistent with previous market cycles.
So the key points for me were, as ARK Invest work from 5-year time horizons, this really helps keep things into perspective. From a fundamentals point of view, Yassin said they have never had a higher conviction about Bitcoin and crypto than they do.
The story with Ethereum, and as Red mentioned, we introed this in our last call, but has really been building over the past year as we see increasing adoption of applications built on the Ethereum blockchain. These are largely centered around decentralized finance and NFTs. In the decentralized finance space, you can think of exchanges, lending markets, derivative and synthetic asset products. All of these that operate in the traditional financial system by centralized parties are now being built and deployed and actively adopted on Ethereum, running as code rather than as by a centralized party. So you can start to imagine some of the efficiencies that are gained there, and also the open access. And so what we've seen, if you look at some of the on-chain metrics, is that the active users on Ethereum have continued to rise, now sitting weekly active users around 3 million at a really fast rate, as well as the total transaction fees paid out on the network to miners, which we think is a signal for the demand of the network, also continues to be at all-time highs. These are really strong signals for the value that Ethereum's providing. And just looking at, for example, the decentralized exchange volume, which just hit an all-time peak with the recent volatility in May of last month, we continue to be really excited and looking closely at this. Just to name a few more things, there's also some imminent network upgrades to the Ethereum protocol that are coming just next month that will change the way that some of those fees are distributed, and incorporating a deflationary pressure on the Ethereum supply, which we're also really looking forward to. Of course, there's been a lot of volatility recently. And one of the things that's actually impressed us, one, there's the general shakeout of the over-exuberance that could have been in the market, but two, with many assets that are issued on Ethereum falling 30, 40, 50%. We saw, of course, many liquidations in accounts that may have been over leveraged, but the decentralized finance ecosystem actually held up really well. The automated market makers did exactly what they were supposed to do. The stable coins held their peg. And this is something that was really a good test, and something that we were impressed to see really withstand the test of this cycle. And so we're continuing to watch these metrics and really looking forward to some of the things that are coming up on Ethereum for those reasons.